Welcome to the Indxx Insights Podcast series, where we meet with industry leaders to discuss interesting topics related to the ETF ecosystem. Today, we have a very special guest, Will Rhind, founder and CEO of GraniteShares. Will, thanks for joining us.
Thanks, Rahul. Good to be here.
I am very excited about this discussion because you're a fellow entrepreneur like me. And unlike me, actually, you have a lot more experience in the ETF ecosystem than I do. You started more than 20 years ago. And so what I was hoping to do today was to start actually just with a bit of background on your history in the industry, how you started in the business, and how you ended up today founding GraniteShares, a very successful ETF shop.
Sure. So my story was I got into investment banking just after college. So literally my first job, after getting out of college or university, I went to the City of London and started as an analyst at an investment bank and did that for 1.5 years. At the time, it was just after the tech bubble had burst, so early 2000s, and the job market wasn't that great. The opportunity sort of within the bank wasn't sort of what I wanted to do at the time, and therefore was looking for another opportunity. And I found a role at Barclays Global Investors, which people now know as BlackRock, and started there on the business development side. So I started on the asset management side, didn't know anything about asset management, working for this firm that was huge at the time, but was principally or headquartered out of San Francisco. We're working at the London office, and we were launching the first ETFs in Europe. And I could see from business development front that when I would talk to clients, clients would be very interested in this new product that we had called an exchange-traded fund, or ETF. And we were selling all sorts of different products at the time. We had everything from hedge funds to money market funds, but it was these ETFs that kept coming up over and over again in client conversations. And so quite quickly, the business was growing, and this became a sort of business within a business. And so it was branded iShares, was a separate unit where people worked for iShares within Barclays Global Investors and focused their time 100% on this business. So I was one of the first people to join that team in Europe and really stayed with the product throughout my career. So at the time, the industry was growing very quickly, or the business was growing quickly. And I was looking for an opportunity where I could have more upside to the growth of what I saw was going to be a big industry. And I looked for opportunities. The competition or the landscape was starting to get competitive, and I joined a small startup called ETF Securities. And ETF Securities at the time was 150 million or so assets under management, and had a suite of commodity-based ETFs. So doing the first commodity-based ETFs in Europe. And I had some equity in the business. It was a great sort of ride. We went from 150 million to 30 plus billion, at the height. And ultimately the business got sold to WisdomTree was the biggest part of it. But it was a great experience because it gave me that more business experience that I was looking for. So not just the product and the sales and the more sort of tactical things, but with dealing with investors at the board level, etc. So a lot of good experience that I then took to the next role, which was the CEO of the GLD ETF, was a joint venture between State Street and the World Gold Council. So was doing that or running that business for 2.5 years, and then left, founded GraniteShares. And so that was 2016. Took about a year to get the asset manager set up, get the licenses, etc. And then we went live with our first product in 2017.
We'll come back to GraniteShares, but I had to comment that your story as an entrepreneur is a story that I myself have experienced, where you see an opportunity, when you kind of fall into a role and you kind of see the big picture, and then you try and seize that opportunity. That's something that I hear a lot from a lot of different people. It sounded like, obviously, investment banking analyst in London is kind of the dream job out of university, probably. A lot of people do that, and they get that first dream job. Mine was at a record company. I worked at Atlantic Records, but then something that seems like a dream from the outside when you actually get in there, it's not so much of a dream when you're actually in the trenches doing the day-to-day work and you realize maybe this isn't what I want to do, right? So it was very similar with me with Indxx, where I could see that indexing, just like the ETF industry, was going to grow massively. So this is where the focus should be, and that's how kind of Indxx came about too. One of the things that you kind of touched about a little bit in a ancillary fashion, but which is really key, is getting that equity upside in a business, and also the experience with the boards, with private equity, with venture capital, all these things that you probably had no idea about when you got into it.
No idea.
That are difficult, tough to learn, sometimes stressful experiences, but that make you kind of a better business person, and that probably have helped you a lot get to GraniteShares, right?
Yeah.
One question I always love to ask people is, before we even get to GraniteShares, everything is a lot harder than you initially think, right? I mean, when people look at GraniteShares or look at your background or look at mine, people are like, wow, you've done such a great job. But they don't realize how difficult it really is on a day-to-day basis, because I don't know about you, but I didn't have anybody, you don't have a boss to rely on, right? It's just, it's all on you. And do you feel the same way, that it's, the decisions are your decisions to make, and the company succeeds based on, or fails based on your decisions?
Yeah, I mean, look, it's one of these things where it's impossible really to sort of step into somebody else's shoes if you haven't done it.
Yeah.
The majority of stories around entrepreneurship, focus on the start and then the exit.
Yeah.
And no one talks about the middle. What happens after you raise the money? Like, you raise the private equity round or the venture capital round, the press release goes out, people are excited about the new product launch, etc. And then obviously, assuming you're successful at some point, you have an exit and people talk about how great it was.
Yeah.
But they don't talk about how hard it is to actually build whatever business it is that you're doing. And for us, it was no different. I mean, the ETF industry is a very, very tough business, or asset management more broadly, but ETFs is hyper competitive. You're dealing with or competing against some of the largest asset managers in the world. So this is not an industry which is easy. And worse than that, it's an industry where it's completely transparent because of the regulatory regime. Yeah. So whatever you do, someone else can copy it.
Yeah. They can see the methodology.
And invariably
they
do.
Yeah.
And so it's incredibly difficult to build a business where a lot of industries, there's IP, there's other ways you can protect the product or the design that you have, or you can't in ETF world. So super difficult business, and again, it's a huge amount of hard work that is goes on, and a lot of sacrifice for years before you can start to see some of that success.
And you're absolutely right. People don't see all the work in the middle.
Yeah.
In the book, it's called like a hero's journey. They don't see all the struggle to get to the top of that mountain, or to get that successful exit if you get there, right? Whenever we meet fellow entrepreneurs, we kind of know okay, you're doing something really difficult here. Let me ask a different question, actually. You had all the success with ETF securities, World Gold Council. And knowing how hard it is, what kind of made you want to try and do something new again? Like, what was the thought process where I want to go through this hell of building a company?
I think for all of the hard work and all of the sacrifice, all of the negative things, it's still extremely exciting. And I think coming from a big corporate world, whether it be a bank or a large asset manager, you know what it's like to work in a large corporation. So I think the first decision is, do you like somebody that works in a nice corporate environment, or is that something that doesn't suit you? And I think I've worked out fairly quickly that wasn't something that really suited me ultimately. So went on the entrepreneurial side. But once you've made that decision, and I think you start the startup, it's just much more exciting. You're closer to the business, you're closer to every decision that's being made, and clearly you live and die by the success that you have, or failure. Yeah. And assuming you have a positive experience, but I think the same goes for people that have a negative experience. But that's another conversation. I think for me, when you have a positive experience, it's just difficult to go back. Yeah. It's impossible to go back to that world. When you are growing something, watching something build, watching something develop, and obviously seeing the rewards of that financially, from a career perspective, etc. It's very difficult to go back. And so I think you want to build more on.
I agree. It's kind of like you've drunk the Kool-Aid. You know what it's like from a freedom perspective to be an entrepreneur.
Yeah.
It's the exact opposite of working a corporate job and not really having your destiny in your own hands. Right?
That's right.
I mean, it's classic risk reward, and there's sacrifice involved, but you get a lot of upside to it.
Yeah, and I think maybe at the beginning I'm not sure I had a specific. Well, definitely wouldn't have had a fully thought out vision of me starting my own business. It was much more a progression, and first of all, getting equity in a business, so not being the founder, not being the CEO, but just a employee that had equity in that company, some upside, to then becoming frustrated for similar reasons, albeit differently to a large corporation, where you have ideas, you want to take the business in a certain direction, and ultimately the founder or the CEO, whatever, doesn't share that vision. Yeah. And so those frustrations lead to, in the case of us, it's things like, oh, well, okay, well, if you don't want to do these products or don't want to go in this direction, maybe I should do it myself. Yeah. And I think if the opportunity's there and the opportunity's big enough, you do it yourself. Yeah. So again, it's a similar friction or pain points, but lead you now to the point where you have the experience. So that's not an excuse. So now you have the experience, and you're ready to take that opportunity, and that's just down to you.
I completely agree. Like on the indexing side as well, we saw an opportunity with custom indexing. We saw that business was not being satisfied from the big existing index providers, so we said we'll do it ourselves. And it's amazing, 15 years later, that opportunity is as large as it is, but it's thanks to the industry itself being as large as it is, right? So what was the white space you saw that led you to found GraniteShares? So
I think the beauty of an ETF business is that you're creating individual funds or individual strategies that can do very, very different things. So for us, it wasn't a one sort of idea or one particular opportunity. We thought that there were multiple opportunities which we could address. Maybe not all at the same time, but multiple opportunities. And the first thing that we decided to tackle was on the commodity side. The commodity markets were something that were not mainstream. So in other words, the largest manufacturers, the largest asset managers typically didn't play in the commodity markets. For example, Vanguard didn't have any commodity ETFs. So we felt like that was a strong sort of area that we could compete. And furthermore, because the big players didn't have really any exposure to commodities, or certainly quite limited exposure, the expense ratios or the management fees were still very high within that particular space. The other thing that was interesting was that the ETF structure had evolved a little bit since the beginning, and there were some structural efficiencies that we thought we could bring. So in other words, some of the existing or legacy products were sort of tax disadvantaged, and we felt like we could improve the design and give people a better investing experience. So putting that all together, the initial proposition was to sort of disrupt the commodity ETF market space by offering a product that was low cost, or certainly cheaper than whatever was out there, with a better structure. And that was really like the first problem that we solved for investors. So core commodity access, a better product at a lower cost. And that was really the first sort of thing that we did, and was the first step that we took to building the business that you know today.
That's kind of like us on the index provider side. We saw an opportunity, we could do things more efficiently at lower costs, so we launched that too. It's actually it's similar stories here.
I think it's important because you have to have something that, I think we felt we had a lot of great ideas, but starting off, you have to have something that you have a high degree of certainty will work. And so there's nothing that people love more than lower cost or a good deal. And I think from that perspective, the market share sort of strategy was actually a good one to start with, because the other thing that it did was allows us to raise AUM faster in an established category versus a lot of the ideas that we'll talk about probably later that we've come up with were unique.
Yeah.
And the good thing about a unique idea is they're coming to market with it first, and therefore you have a chance to get good share. The problem with it is it takes a lot more education than something that everybody knows. So when we started with something like gold. That was a well-established asset class. Everybody knows what gold is. And so if you have a better solution, people are more willing to accept that and more willing to take the call and ultimately invest than, say, a new strategy that nobody's ever heard of where you have 50 PowerPoint slides to try and explain what the actual strategy does.
Yeah, well, gold is already part of a lot of people's portfolios, so you're absolutely right. It's a lot easier to slot into it than it is to create a whole new exposure that they don't even understand to begin with.
Yeah, and there's a snowball effect to it, because in our business, things like assets under management are a kind of a key calling card, and they demonstrate a level of credibility for your firm and become a key hurdle rate for a lot of buyers, a lot of investors. They want to see a certain size. Yeah. So it was a good thing for us to do, because it enabled us to raise money, I think, faster than if we tried to do something completely different, and therefore gave us that sort of credibility, being able to say, hey, we manage X amount of millions with these particular products.
So you did the commodity products, including gold, and how did it go?
It was very tough to begin with. So we launched a broad commodity fund, and despite the fact that it was a lot cheaper than anything else on the market, had a better structure, it was super difficult to get people to invest, take a chance on a no-name company. It really took some time for us to get any kind of traction at all. And we were really, we were talking about, with advisors, for example, the smallest sort of amounts of investment. Yeah. In some cases, it would take months to convince somebody just to put in a relatively small amount of money. Such was the challenge. When you're starting something and it's a no-name company, you're trying to convince somebody to invest. So it was really tough. We had our first real breakthrough with gold. So the gold, again, similar proposition, was a cheaper fund than what was out there at the time. And gold was a bigger asset class that people typically owned, at least some in their portfolio. So that was an easier one. But we had a big breakthrough when we managed to convince a large sort of RIA who already had a gold position in a competitor gold ETF at a higher price to switch to ours.
Okay.
And that was a big sort of moment, because you then had a large investment. It was about $100 million into the fund. And then from there, you're able to raise that sort of snowball effect.
Yep.
Happens a lot quicker
Yep.
than when you're sort of scratching and clawing, for anything to try and get the fund to, 2 million, 3 million, 10 million.
And then to suddenly be at 100,
yes,
the doors open up much more quickly for you, and it becomes an easier
That's
story.
right.
Yeah.
And it's never easy, but the more assets that you have, the easier it is to have that conversation with somebody, the more credibility that you're deemed to have. And so it makes things a little bit easier.
Yeah.
But also gives you some sense of validation that what you're doing is actually correct and you're adding value to the market. You're producing something that is adding value to investors, and they're rewarding that by investing.
Yeah, it validates your belief in yourself to a certain extent.
Yeah.
I always found, we had the exact same thing at Indxx, where the first couple of licenses were so difficult. Convincing somebody to take that first leap, and then it got easier and easier. But what I always found ironic was that we weren't doing anything differently than the first time around. It was just that people were kind of validating what we were doing, and the pitches themselves and the licensing themselves got easier, but our core business was still the same as when we were scrounging for the first license.
Yeah.
I always just found that conundrum to be very thought-provoking in my mind. Like, the market has validated me with licenses, and therefore it's going to validate me with even more licenses, even though I was doing exactly what I was doing when I had no licenses.
One interesting thing as well was that once we started to raise some money, and we had sort of broken clear of the zero sort of boundary, that people would say to me, "Oh well, you started your company. That's I guess it was pretty obvious given your experience. I suppose that all of your clients just invested. All of your previous investors, you just put money in." And I was like, "That's nothing could be further from the truth."
Yeah.
And what's so interesting about that is, I think that when you have clients, customers at a previous firm, it's all about the context at that time. So if you're running the largest commodity fund in the world, you have a different set of clients than if you're running the smallest commodity fund in the world.
Yeah.
And so for people that I knew well, they didn't invest with GraniteShares from day one because the context was different.
Yeah.
They had to have certain investment criteria, et cetera, which we couldn't meet at the time. So we actually ended up raising money from people that we had never met before, never talked to.
Yeah. Yeah. We had the same thing.
That was the the huge challenge, to find people, convince them to invest. And it's still obviously a challenge today, albeit differently. But that first sort of $100 million of AUM,
it's always the hardest. It's always the hardest. Yeah. For us, those first few licenses were the hardest. And we had the exact same thing. When I started Indxx and we went into the indexing space, I said, for my previous roles, I knew ETF issuers. I said, no problem, I'm going to get some licenses. And then you realize, because we'd allocated significant money to them when I was running investments for an investment advisor in New York. But then when you start having those conversations, you realize that the context is what matters.
Yeah.
And you're not going to be able to work with those people until you get up to a certain amount of size and are able to meet their requirements. So
and you might
then
never.
You have to start from, exactly.
Yeah.
And then you have to basically start from scratch. And you've got to build relationships with people that you never interacted with before, because frankly, they were never on your radar. So let's talk a little bit more about GraniteShares. So now you've been in the business for 8 years now at GraniteShares. Where are you today versus how you started on the commodity side?
When we started as clearly just like any issuer or any asset manager in the ETF space, with initially one ETF, became 2 ETFs, 3, but a small US commodity limited offering. We're now a global business, so we have ETFs that are listed here in the US, in major European markets, and we have physical marketing and distribution presence in Asia. So we have a global business. We run, depending on the day, somewhere between 8 to 10 billion, and it's a profitable company that's growing very rapidly. In the US, we have 30 different ETFs now, all sorts of different strategies, from the original commodities to income strategies to leveraged ETF strategies, and huge platform of products in Europe as well.
Given where the business is today, how do you think about the opportunities for the next 5 to 10 years? Because for me, as a business owner, that is my primary concern. It's, of course, you care about growing the business on a day-to-day basis, but you also, as a leader and as a founder, you, I'm sure, think about where is this business and where is this industry going to be in 5 years, and how do I fit in? So can you talk a little bit about that? First of all, do you agree with my statement that you think 5 or 10 years ahead? And second of all, if so, where do you think we're going as an industry?
I absolutely think about that, and it is a concern. And one of the key considerations, of course, is for any business is do you want to play a role in that next 5 or 10 years growth? Because we've got to a position where we could sell the company if we wanted to. But the first decision you have to make is, do you want to keep going?
Yeah.
And I think speaking for myself, obviously, but for the management team as well, the answer to that question is emphatically yes. That we've got a great opportunity. We feel like, in a way, we're just getting started, as crazy as that sounds. And we want to build a business that's really significant in this industry. We think we have that opportunity, and so it's now up to us to execute on that. But absolutely, we think about the next few years and try and position ourselves, staff ourselves, do everything to realize or optimize for that outcome.
It doesn't sound crazy when you say that you want to keep going, and because at the end of the day, the hardest work has been done. And I was talking to my co-CEO about this last week. You've built the business up to a point where it is profitable, and it's got a good base of clients and global base as well. So that's the hardest job, to take a company from zero to where you are today, right? So it's you say it sounds a little bit crazy, but for me as an entrepreneur, it absolutely does not sound crazy at all. It's absolutely logical. But for the industry overall, do you have any thoughts about where the industry is going? Because from my perspective, when I look at indexing, I see increasing complexity in terms of data, in terms of methodologies, in terms of outside influences like AI. So I see a lot of threats, but I also see a lot of opportunities for more customization, which is our core business model. Do you see something similar for GraniteShares and your core business model?
So first of all, I think the industry will continue to grow, and people have been saying since the early 2000s that we have enough products, that the industry is mature, all these different things. It's all nonsense.
Yeah.
The most basic correlation that exists is that the reason why we're growing and the markets are growing is because global wealth is growing. So long as global wealth continues to grow, there will be more money available, and therefore more money for markets and ETFs or investment products. So first and foremost, the industry is growing, will continue to grow, and then it's a question of do you love what you're doing?
Yeah.
And are you still excited by this industry, by this business, about what the future kind of holds? And the answer to that is yes. And I think you're set on that trajectory to keep building.
Well, that gives you your answer right there, right? You love what you do. You've done the hardest part of being an entrepreneur. So of course, keep going, right?
And I think to your point about the hardest part, what I've seen, because I've been around the industry for quite a long time, is I've seen a number of colleagues over the years, for different reasons, leave the ETF industry and then all try and come back. And it's much harder to try and come back because that industry's moved on. And it's much harder to sort of play that catch-up game. So another thing I think about is, well, if the objective of selling the business would be just to start another business, it's like an ETF business, that would be crazy to sort of do it all again versus continue to do what you're doing now. I think it would have to be something aligned with you go off and do something completely different with your life.
Totally different.
Yeah.
Like be a fisherman or something. Or for me, a professional golfer, that's even more for fantasy. So where do you think the innovation is going to be in the industry in the next 5 years, in your opinion?
The good news is I don't know. And that's the great thing about innovation, is that someone will always come up with a new product idea that people didn't think about. And that's the great thing about innovation. So whenever people have said or suggested that the industry's matured or we have too many ETFs, there's not enough opportunities, no white space, I also remind people that it's the products that somebody's going to invent tomorrow or 6 months' time or 2 years from now that will be the relevant products for that particular time, drive a new wave of growth. Regulations change, markets change. I think specifically the product set, a lot of the product set that we are involved in, which is serving a more retail customer, I think that is a huge area of growth for the industry. And so products that are not your sort of traditional buy and hold advisor-based investments, the products that satisfy a younger generation of clients who are looking for more excitement in their investment portfolios. That could be leverage, that could be income strategies, that could be new technology-based themes, etc. So there's a number of different things that could go into that, but that's the trend I think is going to grow massively over the next few years.
More retail focused, more younger generation focused.
That's right, and an increasingly global audience that is getting access to markets through fintech apps. So being enabled, a new class of investor, accessing markets, and we want to be serving the products that they will demand.
I completely agree with what you're saying. If you look at the US and you look at things globally, just very simply, if you're going to have, I think the numbers are 50 or 60 trillion dollars of wealth transferred from baby boomers to millennials, what types of products do millennials invest in? They're very different than the products that their parents or grandparents invested in. And similarly, globally, you have all these people who are becoming middle class around the world who now, through fintech, have access to the markets. And what are they going to invest in? Probably what millennials in the US are investing in a similar manner as well. So I completely agree with that statement. So the people who say that there's not going to be more innovation, there's no more white space, the industry is done growing, I think are completely wrong.
Yeah.
I hope so, because our businesses kind of rely on that too. So
yeah, and I've heard that so many times.
Yeah.
And ultimately, I believe in the free market model where the market or the investors will decide when enough's enough.
Yeah.
And when you launch products that don't or are not successful, there's creative destruction. And those products die. They make room for new products to come to market, new investment strategies that do work and are things that people want.
Yeah.
And that's the way we move forward.
So what advice would you give to an entrepreneur who is, first of all, thinking about launching a new business in this industry? And then what advice would you give to entrepreneurs in general?
Well, I think the best advice that I could have probably taken for myself is just to get started. And I think that sometimes what I mean by that is, I took a long time before starting GraniteShares. So my journey is definitely not, atypical of a lot of, I think, founders or a lot of people that start businesses from a position of industry expertise. I think that's very much the norm rather than the exception. But it takes time. I started the business when, I was at an age level that had family, have responsibilities, things which is difficult to take that kind of a risk. And I think the older you get, clearly the more difficult it is to make that risk. So I think the reason why there's a high correlation between young founders in particular is because they've got nothing to lose.
Correct.
And at the same breath, I would say that if you're looking to start a business, there is definitely something to be gained from experience. Clearly, there's a huge value in that. But at the same time, you're never going to learn the skills that are needed unless you actually do it. And so there's that sort of accelerated learning effect that I think the sooner you decide to do it, the better.
So your advice to entrepreneurs is do it as soon as possible and learn on the go. Is that a fair statement? Once you get a certain amount of knowledge.
Yeah, do it before almost like when it feels almost too uncomfortable. Like, I'm not ready.
Yeah.
I'm not ready.
But you'll never be ready, right?
You'll never be ready. There's never a perfect time.
Yeah.
You just got to go and do it.
Yeah.
And you'll figure it out.
How much harder has it been than you expected?
I mean, honestly, it's been a lot harder. I don't know if I could sort of put it into words or put it into sort of something substantive, but I think looking back on it, I would think really, really hard before doing it again.
Yeah.
So I don't want to put people off by saying, don't do it, it's too hard. But there is a part of the message which is, it's really brutally hard.
Yeah.
And it's going to take a lot from you. There's a lot of sacrifices that you need to make. So you better make sure that you enjoy what you're doing.
Yeah, you better love it. You better be passionate about it. And it circles back to what you said at the beginning. People only see the founding of the company, and then they see hopefully a successful exit.
That's right.
And they don't understand all the work in between. I always tell people the same thing. When I started with Indxx, I said, okay, it's probably going to be twice as hard as I think it's going to be, and it's probably going to take twice as long for us to become, our goal in terms of assets and profitability. It was probably 10 times as hard, and it probably took 4 times as long. And nobody can understand it because you're probably the same as me. You're thinking about your business all the time. Your business is your life, and it can bleed in negatively into your life too. And you have to, at least with me, I really have to make a conscious decision to leave my work, at the office, and when I'm at home with my wife or with my parents or with my siblings, be there as opposed to in my head at the office thinking about work. So yeah, do you have the same thing?
Yeah, and I was going to say that what makes it even more complex and even more challenging is the fact that you're trying to juggle or solve for so many problems all at the same time. Yeah. So it's not like a business where you have one product, you launch one product, and that could be a massive success or failure. Here you have lots of different products that do different things, and your competitors are competing with you in all these different products at different times, and there's regulatory hurdles, there's changes in laws, there's competitive threats, all at the same time. And so your business is constantly evolving, and you constantly have to change. So for the idea that we had at the beginning, for example, yes, we had an idea to do commodities, we did that, but the plan has sort of changed dramatically over time, because it has to.
Yeah.
You have to evolve with the market. So you can't be dogmatic and think about a specific product or a specific thing you want to do, because it will probably change.
Yeah.
And by the time you get to market, someone else may have already got to market before you, and then you have to change.
Yeah.
Pivot again to a new strategy.
And the people you're competing with are typically bigger, been around longer, and they're better funded.
That's
so you
right.
have to be nimble, and you've got to think strategically as well.
Yeah, you have such a disadvantage as a startup.
Yeah.
The other thing that people don't understand about asset management is that a huge disadvantage is that most startups, the one advantage they have is that they can compete on cost versus a bigger incumbent. It's completely reversed in asset management because it's a scale game. In other words, the more assets, the more revenue that you generate, the more you can squeeze suppliers on price.
Oh yeah.
The less revenue or assets you have, the more that you're a price taker. Yeah. So service providers squeeze you, and you end up working for service providers for years until you get to that position where you can finally achieve that escape velocity and maybe have some bargaining power yourself. But it's completely reversed. So you can't compete with the big thing that all startups have, which is competing on cost, doing things nimbler. You have to compete on innovation, and that's just very, very difficult.
So to summarize, you're saying it's really, really hard. It's going to be much harder than you can ever imagine to be a successful entrepreneur, but the payoff is immensely rewarding as well.
Yeah, I think with any business, right? When you build something, you're able to get to that point where you've achieved that escape velocity, that you're able to look back and say, we started here.
Wow. Look where we are.
Exactly. Look where we are today.
Yeah.
It's obviously that's why you do it. It's incredibly rewarding.
Yeah. So you're saying you shouldn't be dogmatic and you need to be nimble, because the people you're competing against are typically bigger than you, better funded, and have a lot more muscle than you do, and have a lot more relationships than you, right?
That's right. It's the one advantage that most startups have is that they can compete against an incumbent on price, because it's cheaper for them to provide the product or the service than it is for the large corporation or the large incumbent. In asset management, that's completely flipped. Yeah. So we're in a scale business, a highly regulated environment, where our compliance has to be the same as the largest firm. So therefore, it's a very unfair playing field. But a scale business comes at the more assets you have, the more revenue that you generate, the more you can squeeze suppliers on cost. Mm-hmm. When you're a startup, it's the opposite. The more that, when you start and you have no assets and no revenue, the more that suppliers are squeezing you on cost. So you end up working for service providers for a few years.
Because from their perspective, you're just as much work as some of the bigger guys, but you're not bringing them any revenue.
Exactly.
So I completely agree with you. It's a big conundrum, and from an index provider perspective, it's a very similar type of discussion too, but it's even more so for you because of the much higher regulation that you guys have compared to us. So Will, this is really amazing. I really enjoyed this chat as a fellow entrepreneur. Thanks for giving your perspective. I hope everybody watching enjoyed this as well. And thank you for your time, as always.
Yeah, thank you, Rahul. Great to be here. My pleasure.
Thanks for joining us today. I look forward to seeing you on our next episode.